Kenya's President Uhuru Kenyatta has less than a week to sign into law a bill that puts a cap on bank interest rates. The cap will stand at 4% above the indicative central bank rates.
Kenyan MPs passed a bill seeking to control interest rates at the end of last month. The central bank governor has opposed the law, arguing that it would introduce inefficiencies in the lending sector. But borrowers say it will open the doors to cheaper loans.
When Catherine Ryungu walked into a Kenyan bank and walked out with a mortgage, she joined a list of Kenya's privileged few. Privileged because there are only 22,000 mortgage portfolios in Kenya. Nothing prepared her for what would happen 2 years into her repayment.
The interest rate was revised from 15% to 25%. And I was servicing 2 mortgages at the same time. And when they revised the interest rate, it shot from 100,000 to almost 150,000. So that's like a 50% increase without notice and without being given adequate time to revise my financial arrangements.
Catherine, who now publishes a horticulture magazine, then lost her job. Her financial burden too big to bear, she walked back to the bank.
I fell back by about 300,000. I even tried to tell them to give me about 200,000 when my business went down so that I could lift it. And they told me that they had over-financed me, therefore they couldn't give me the little money that I needed to show up my business.
From being listed as a bad debtor at the Credit Reference Bureau to losing out on advertisement revenue due to lack of finances to show up her business, Catherine says her dream of owning a home has been painful.
Abusive relationship, because all that the bank cares about is their money, not me or even my business.
Faced with the reality of what they term as an exploitative affair between banks operating in Kenya and their clients, Kenyan members of parliament passed a bill that caps bank interest rates at 4% above the indicative central bank rate.
The preferred system is where the market is able to determine price, but where you have an imperfect market, you are sometimes forced to intervene in order to get the desired result.
Bankers are, however, urging President Uhuru Kenyatta not to sign the bill, arguing that the bill will hit small borrowers like Catherine the hardest. They also argue that it will lead to inefficiencies in the credit market and promote informal lenders who will prey on desperate borrowers.
Informality has got its own challenges. One is not regulated, and therefore the rates that we're trying to say that are high in the banking sector, in the informal sector, the Shylocks, the loan sharks, it's even worse.
Most Kenyans will hear none of it.
This law will protect me as a borrower from having to deal with crazy revision of interest rates.
If President Kenyatta signs the bill, lending rates will be capped at about 14.5% based on the current central bank rate of 10.5%. A huge relief for clients currently paying rates of between 18 to 25%. Bringing down banking interest rates was one of President Kenyatta's campaign pledges. With just a year before the next general election and with the law to cap banking interest rates on his desk, Kenyatta must balance between political and business interests. Sarah Kimani, SABC Business News in Nairobi, Kenya.